This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you by...
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
Second half kickoff. July begins on an up note, but will the market's momentum continue once those profit reports start rolling in?
Record-setting heat, how the people and businesses of the Southwest are handling those scorching temperatures.
And the price of popcorn, the answer to the question on every moviegoer's mind. Why does the crunchy stuff cost so much? All that and more tonight on Nightly Business Report for Monday, July 1st.
Good evening, everyone. The new quarter and the second half off to a good start with investors in the buying mood. The major stock averages rallied today thanks to some encouraging reports on the economy. Construction spending in May hit a 4.5-year high, helped by all that new home building. And a private reading on manufacturing rose a bit higher than expected for the month of June. The blue chip Dow was up triple digits most of the day and trading above the critical 15,000 level, but then gave up a lot of momentum near the close. Some strategists blamed it on jitters over anti-government protests in Egypt. While the Dow was up 173 points at the session high, but finally closed up 65 points. The Nasdaq added 31. The S&P 500 rose 8 points.
Well, the start of a new quarter means it is soon to be earnings time. Beginning next week, we will learn how companies did over the past 3 months and what their chiefs say about business for the rest of the year. Joining us now to discuss is Paul Schatz. He's president of Heritage Capital. Mr. Schatz, welcome. Good to have you with us. A lot of the investment folks that we've been talking to say that now that the Fed has signaled that it may dial back on stimulus, that the focus is going to shift more and more to business fundamentals. What companies are able to grow profits and revenues and which are not. Do you agree with that?
The answer is yes, but I think it's a short-term focus, Tyler. First of all, there's really a vacuum of news right now, so earnings are going to start next week, and we'll be really focused on them until we're not, and that's probably only a couple of weeks at best.
All right, so what can we expect out of this earnings season? What will CEOs be telling us about their earnings and their revenues?
I think it's really more of the same. People are craving for top-line growth. They're not getting it. They're making the numbers in the bottom line, but the top-line growth's not there, and I think that has somewhat of a that's been a longer-term drag on the market. I think it remains a long-term drag. Equities are pretty stretched, and I think you'd really need earnings to blow out to the upside to get any kind of catalyst here to get us past maybe 16,000 on the Dow.
And you don't see that blowout of earnings coming. The S&P right now is at about 1,600 and change or thereabouts. It was a heck of a good first half. Where do you think this barometer is going to end the year? Do you think we have more gains ahead, or are the best days behind?
So in January, our forecast was that this year was going to be tremendously front-loaded, much like 1987 was. And I still feel the same way. I think all the easy gains are made. I think it's at least 50-50 that the highs are in for the year. I could see a poke above to make a nominal new high, but I wouldn't put all my eggs in the equity basket right now. I think you're going to have an opportunity to buy equities 10 to 20% lower over the next 3 to 6 months.
All right, so where would you put your eggs right now? What baskets do you see opportunities for investors?
So for equity investors, I think you've got to play it close to the vest. Just because the market's going to go on sale, and I've heard other folks talk about we're now back to single stock risk and a rising tides not lifting all ships. I agree with that. I think whatever rallies come from here for the next few months are going to be very narrow, and I don't think you're going to throw a dart at an index, and that index is going to lead the way. So I think you're selective. I'm still bullish on financials, and I'm still bullish on biotech, and I think even healthcare could get a little bit here. But the key is, when the market corrects, which I think it will over the next couple of months, they're all going to get hit. It just depends upon, to what degree. On the flip side, bonds have been hit pretty hard, and I think there is some relative value in the bond market. So certainly investment grade, the higher quality bonds I'd be looking at right now, as well as floating rate.
So, another way to put you're going to have an opportunity to buy stocks at 10 to 20% lower prices is that you're going to lose 10 to 20% of your money if you're in stocks over the next few months. Let's talk a little bit more about bonds. You think that they're bottoming or what?
So I think it depends upon what time frame you look at. Bonds had a really tough second quarter. They had a very tough June. And let's say these 30-plus year bull market in bonds ended this year. It's not going to be a straight line move from 2% in the 10-year to 8% in the 10-year. It'll be a sawtooth move. So we were stretched already. The bond market got hit pretty hard. I think the next decent move in bonds, the bond market probably rallies, which means rates come down a little bit. And I think that's where you probably are for the third quarter. Bonds should be okay this quarter. And I think for the more aggressive, you could tiptoe into gold and the metals.
All right, Paul, thank you very much for your look ahead to the second half of this year. Paul Schatz is president of Heritage Capital.
There were a number of mergers and acquisitions on this Monday, and one attempted one. Onyx Pharmaceutical has rejected an unsolicited $10 billion takeover offer from rival drug maker Amgen, saying the offer, quote, significantly undervalued the company. Shares of Onyx, which makes the liver and kidney cancer drug Nexavar, surged today, closing up a staggering 51%. The company says its board is now exploring other potential suitors.
And another buyout makes a legendary newspaper company the biggest TV station owner in the nation. The Tribune Company, best known as the publisher of the Chicago Trib, the Los Angeles Times, and other dailies, is paying $2.73 billion in cash to buy 19 television stations from a company called Local TV Holdings, creative name there. The move gives Tribune ownership of 42 commercial TV stations now and a significant revenue stream as it looks to sell its newspaper operations. And
one other acquisition announced today is music to the ears of private equity firm Kohlberg & Company. It's paying about $500 million to take 160-year-old piano maker Steinway Musical Instruments private. Shares of Steinway shot up 16% today. Its ticker symbol will be dropped from the big board, LVB, which actually stands for Ludwig van Beethoven. Tyler?
Well, with raises hard to come by for the average worker, top company executives are singing a different tune, seeing their pay continue to climb thanks to a very healthy stock market. Now, a new study just out shows that on average, CEOs of big companies earned 15% more in 2012 than they did the year before. So which ones earned the most and just how much money are we talking about? Mary Thompson has the details.
Pay for the average worker may be stagnant, but at the highest levels of corporate America, it continues to rise.
It's unstoppable because once you have these high numbers, everybody wants them.
In 2012, the average pay for the top 200 CEOs of firms with over $1 billion in revenue, $17.8 million. Median pay rising 16% to $15.1 million, according to a study by the compensation researcher Equilar, as the company's average net income and total shareholder return rose in the double digits. Returns downplayed by Harvard Business School's Rosabeth Kanter, who says many times the market's gains mask a CEO's true performance.
We often, in good times, credit CEOs as though they were geniuses, even though they may not have had that much to do with it, and they may be bankrupting the long term in order to get those short-term rises.
Rising to the top spot for pay, Oracle's Larry Ellison, holding on to the rank, claimed in a smaller study released in April. Oracle's founder pulling down $96.2 million, 24% more than in 2011, even as total shareholder return fell 22%, a disconnect criticized by Yale's Jeff Sonnenfeld.
We just got to wonder what the boards have been doing. It's the outlier examples that are the outrage here, not the overall pattern.
Examples like Activision's Robert Kotick. At number 2 on the top paid list, his $64.9 million, a 680% increase from 2011, even as shareholder returns fell 12%. Behind him, 2 men with pay cuts, even as returns for their shareholders jumped 42% and 55% respectively. Les Moonves of CBS, whose $60.2 million was 12% less than the prior year, and Discovery's David Zaslav, whose $49.9 million was 5% below his 2011 pay. Fifth on the list, Level 3 Communications CEO James Crow at $40.7 million. Media and tech companies dominating the upper end of the 2012 list of top-paid CEOs, while outsized stock and option grants continue to widen the pay gap between the very top and bottom of the American workforce. For Nightly Business Report, I'm Mary Thompson.
Now, some of those Silicon Valley CEOs likely had a chaotic commute this morning. A strike shut down San Francisco's commuter trains. Hundreds of thousands of daily riders scrambled onto backup buses or took to their cars after the first labor shutdown of the Bay Area rapid transit system in nearly 20 years. Worker contracts expired overnight after 3 months of failed negotiations. The sticking point here, wages and medical and pension benefits. So far, no talks are scheduled right now.
And Susie, from the rails to the roads and tough new federal rules for truck drivers that took effect today. Drivers can't drive more than 8 consecutive hours now without taking a 30-minute break, even though they can still drive a maximum of 11 hours a day. They also can't work more than 70 hours in a 7-day period without a so-called restart period of 34 consecutive hours off.
Also starting today, a tough lesson for college students about what happens when Congress can't agree on something. Starting today, the interest rate on new federally subsidized Stafford student loans doubles from 3.4% to 6.8%. The rate for existing loans stay the same. As for Congress, they come back to work next week.
Lawmakers in Egypt also having a difficult time. Hundreds of thousands of mostly peaceful protesters remain in Cairo's main city square for a second day, demanding the ouster of Islamist President Mohamed Morsi after just 1 year in office. Egypt's top general gave those political leaders a 48-hour ultimatum to settle their differences and address the demands of the protesters, or the country's military would impose its own roadmap for the nation.
The heat is on here in the U.S. as well, as century-old temperature records are broken in the nation's southwest. And the triple-digit heat looks to be around for a few more days. Jane Wells has more from Las Vegas.
Viva, viva Las Vegas!
What happens in Vegas melts in Vegas.
It's smoking out here.
I've never been in 117-degree heat.
It's hard to have a lot of fun when it's 117 degrees, as it was on Sunday, tying a Sin City record. It's even harder to work.
It's hot. I'm about 130 in the suit.
The entire West has been cooking, and the oven won't shut off for several more days. In Death Valley, temperatures reached 129 degrees, a record for June. In Palm Springs, it was hotter inside Grant Williams' car, where he photographed cooking a prime rib on the dash. In Phoenix, some U.S. Airways commuter planes were grounded for fear the hot air wasn't dense enough to create lift. But conditions turned tragic outside Prescott, Arizona.
19 firefighters were killed in what probably the worst disaster that's taken place in oil land history here in the state of Arizona.
In Las Vegas, an elderly man without air conditioning died. The heat strained power grids. 1,300 customers reportedly lost power from utility NV Energy.
It could have been worse. NV Energy, which is being acquired by Warren Buffett's Berkshire Hathaway, deployed its new $400 million peakers. They can surge the grid with electricity in only 10 minutes when needed. Meantime, in California, the grid operators were warning residents in the northern part of the state they must reduce power usage over the next 2 days as demand for electricity finally returns to pre-recession levels.
The excessive heat will last through the 4th of July. Vegas casinos are hoping it keeps tourists inside at the gaming tables. After a strong start to 2013, early numbers for the second quarter show a drop in gaming revenues from a year ago. This weekend, though, Wynn Resort says it was nearly sold out, and MGM Resort says the only change it saw was fewer people at the pool. As long as somebody from out of town was braving the heat, somebody hoping to make a buck wouldn't be far away.
I could chill and have a cold one, you know what I mean?
For Nightly Business Report, Jane Wells, Las Vegas.
Poor Elmo. All right, still ahead, would you buy an expensive piece of art online? Amazon is making a big bet you will. But first, a look at some stocks that hit all-time highs today.
The duel over Dell has entered a new chapter. Dell's board says its special committee has reviewed billionaire investor Carl Icahn's latest proposal, welcomes it, and says it will do what's best for shareholders. Icahn, meanwhile, says he has secured financing in hopes of trumping Michael Dell's planned $24 billion buyout of the PC maker.
Tonight's Market Focus begins with a pair of upgrades. First, Best Buy, the electronics retailer, left for dead not so long ago. Credit Suisse resumed coverage with an outperform rating. Best Buy has more than doubled since it hit bottom last November and closed today at $29.74, up more than 8.5% on double the normal volume. Calling Pandora the Netflix of radio, Morgan Stanley upgraded that company to overweight, telling investors Pandora is one of the top internet properties, and investors seem to agree. Shares trading at 3 times normal volume today. Pandora touched a new all-time high before closing at $18.95, up almost 3%, another stock that has doubled year to date.
Dow component Disney gained today as well on the strength of Monsters University. It was the box office winner for the second week in a row. And after the bell, Disney's board extended Bob Iger's tenure as CEO and chairman through June 2016. Iger will now focus on the integration of Lucasfilm. Disney shares rose more than 1% to $63.93. And Cablevision led the S&P 500 winners. It completed the sale of cable systems in 4 western states to Charter Communications. Cablevision also figures in the industry buzz about John Malone's possible moves to consolidate cable companies. Cablevision gained more than 9.5% on double volume, closing at $18.44.
Apple has a lot of tech watchers very excited, eager to find out more about the company's next big gadget. Japan's patent office revealed that Apple has applied to trademark an iWatch in that country, raising hopes that a long-rumored smartwatch, a wearable computing device, may soon be on store shelves. No comment from Apple and no timetable or frame on whether that patent application might be approved.
Groupon is also trying something new, targeting upscale diners. The online coupon site launched a new service today called Groupon Reserve. It lets customers book tables at some of the better restaurants in their city at discounts of up to 40%. The program will use the reservation service from Savored.com, which Groupon acquired last year, and it hopes eventually to expand into high-end hotels and spas.
Groupon isn't the only company aiming for a more well-heeled customer. Along with the higher prices they typically pay for goods and services, Amazon.com now looking to open a new section offering one-of-a-kind paintings and prints and other fine art. Our Robert Frank has more.
The idea of buying a multi-million-dollar Picasso online once seemed surreal, but now it's becoming a reality. Media reports say that Amazon, the online retail giant, is looking to start selling fine art online. It would team up with galleries around the country and sell works for a small commission. Amazon declines comment. Currently, the most expensive pieces sold in the art category on Amazon are posters, prints, and watercolors, most of them priced at under $400. Amazon's move into the high-end art world could accelerate a sweeping shift from white-walled galleries and VIP auction rooms to the wide-open digital screen. Already, the big auction houses and galleries are doing a big business selling fine art and collectibles online. More than $1.5 billion of Christie's sales last year went to online bidders at its regular auctions. The company sold this Edward Hopper painting, called October on the Cape, to an online bidder for $9.6 million. The company also sold a Shang Dynasty bronze wine vessel for $3.3 million to an online buyer. Sotheby's and Christie's have both developed online bidding platforms. When Christie's auctioned off the collection of Elizabeth Taylor for $183 million, it included an online-only sale. Those 1,000 pieces auctioned off totaled $9.5 million, about 9 times the pre-sale estimates. The big question is how the major art galleries will react to another retail competitor. None would comment on the air, but one gallery owner telling me today, quote, "We don't sell fine art online, and we probably never will. Time will tell whether that remains a good strategy." For Nightly Business Report, I'm Robert Frank.
And if you want to read more about online art auctions, log on to our website, nbr.com.
And coming up on the program, the answer to that question that baffles even some economists. Why is movie theater popcorn so expensive? But first, let's take a look at some financial stocks trading at multi-year highs.
A safety recall to tell you about after 100 complaints and 5 crashes where thankfully no one was injured. Ford Motors is recalling nearly 500,000 older model sedans to fix faulty throttle cables. That's on Mercury Sables and Ford Tauruses from the years 2000 through 2003.
Well, if you live in California, you might not want to drive much at all. As of today, California residents pay the highest gas tax in the country, more than 70 cents a gallon, after federal and new state taxes are added in. State officials say the increase was necessary to make up for a gas tax revenue shortfall last year, along with projections for even lower fuel consumption. What's going on here? So many Californians are driving more fuel-efficient cars.
Well, at the opposite end of fuel efficiency, big recreational vehicles, RVs, they're certainly not that fuel efficient, but their sales are soaring thanks to pent-up demand and a desire to camp out in comfort. No company has reaped the benefits more of that impulse than Winnebago has. Its stock is soaring and its backlog of orders has tripled over the past years. And as we head into the 4th of July holiday, a growing number of Americans will be celebrating this week in a brand new RV. Phil LeBeau has more.
At the Camping World RV lot outside Chicago, business is booming.
Our business has been consistently up month over month, and this year we're up approximately 20%.
20%. Walk into the latest RVs, and it's almost like walking into your kitchen or living room. Large flat-screen TVs, stainless steel appliances, and leather chairs. Increasingly, RV buyers want comfort and connectivity.
It's very much a little bit of showmanship when they get to the campground of what their RV can do.
The rebound in RVs explains the buzz on the shop floor at Winnebago Industries in Forest City, Iowa. The company's backlog of orders more than doubled earlier this year, and it keeps growing.
It's just an entirely different environment than it was during the recession.
During the recession, sales plummeted. There were few repeat buyers, let alone first-timers looking for RVs. What's changed? Well, an improving economy is one reason why RV sales are up 38% this year. But Winnebago has also found success rolling out entry-level models like this, which allow buyers to get into an RV at a lower price point.
You're seeing a lot of push into what they call the value segment too, which are lower price points. Even in what are traditionally the very large and most expensive Class A models, Winnebago now offers a model, I believe it's called the Vista, at just under $70,000.
Whether it's a base model with modest amenities or a tricked-out motorhome for $380,000, the RV is back and heading to a campground near you. Phil LeBeau, Nightly Business Report, Chicago.
Well, many of us may be hitting the road in a new RV. For others, it's the height of the summer blockbuster season at the multiplex. And if you've been to the movies lately, you know that not only are ticket prices higher, but so is the cost of your popcorn. But some economists say that popcorn may not really be all that expensive. Steve Leisman gives us a lesson in pricing.
I'm here at Cinema Village Theater in New York City to talk about an issue that's vexed economists for decades. Not how to grow the economy or put Americans back to work, but why, after you pay $11 for a movie, the price of popcorn is so darn expensive. A lot of people say the answer is simple. Once you're inside, they own you. They can charge you anything they want for the popcorn. But economists say the easy answer might not be the right answer. If theater owners have monopoly pricing power, why wouldn't they use it to charge you for a drink of water or to go to the bathroom? Economists say theater owners are engaged in a process called price discrimination, not between men and women or blacks and whites, but between moviegoers who want to pay more to go to the movies and those who want to pay less. To understand why this works, let's rewind and go back to the beginning. Let's say the theater decided to charge you $20 to go to the movies. That would turn a whole lot of people away. By keeping the price low at the ticket window, they get everyone's $11 who wants to see the movie and create an opportunity to get the other $10 at the concession stand. People who go to the movies are the same people who love to eat popcorn at the movies. What's happening is a process called price discovery. The theater owner and the moviegoer are in a silent conversation over how much he or she will pay to go to the movies. And that's the best possible way to charge people money, by choice. Remember, it's hard to imagine you don't have to buy popcorn at the movie theater. By charging a lot at the concession stand, the theater owner maximizes profits and the number of people who come to the movies. Bottom line, the popcorn probably isn't too expensive. If it was, you wouldn't buy it, or you wouldn't go to the movies, but you probably do both. No, the popcorn's probably priced just about right. For Nightly Business Report, Steve Leachman.
And finally tonight, it's the end of an era. If you've ever been to New York City's Metropolitan Museum of Art, once you pay your admission, you get a quarter-sized metal pin as a sign you're legit. It's inscribed with a Gothic M inspired by Da Vinci, and most people wear it on their lapel or collar or shoulder strap. Proud badge signifying your support of the arts, at least for that day. But no more. The pins have become too expensive to make, 3 cents a piece, so the museum is switching to paper stickers. They cost about a penny.
And from penny savings to big money-making investments, we want to hear from you. Tell us which stocks you'd like our Market Monitor guests to discuss this Friday. Send us an email to nbr.com and tell us also where you're from. And that's Nightly Business Report for tonight. I'm Susie Garrett. Thanks so much for joining us.
And I'm Tyler Matheson. Thanks from me as well. Have a great evening, everybody, and we'll hope to see you back here on Tuesday.
Nightly Business Report has been brought to you by
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
I'm Susie Garrett with a Nightly Business Report news brief. The markets kicked off the new quarter and the second half with some modest gains, thanks to a boost in manufacturing in June and a jump in construction spending in May. The Dow, up 173 points at the session high, closed up 65 points today. The Nasdaq added 31. The S&P rose 8 points. Shares of drug maker Onyx Pharmaceuticals surged 51% after it spurned a $10 billion buyout offer from rival Amgen. Apple filed a patent application for an iWatch, a computer device worn on the wrist. Amazon is planning to open a new marketplace, offering one-of-a-kind paintings, prints, and other fine art. And 160-year-old piano maker Steinway agreed to be taken private for $468 million. Be sure to tune into Nightly Business Report right here on your public television station.